All right, guys, back to work. Weekend is over. Let's get back to work, make some money this week. Boy, got a wide open week this week. We got earnings season behind us last week. We got really no major news until later on in the week this week. And I'll tell you, we've got some really nice charts setting up for us for Tuesday, Wednesday. It should be a fantastic week in whichever market you trade the most. I got a bunch of trades I'm tracking for tomorrow. I'm going to go over my favorite trades in the video here tonight. You have a game plan to make some money on Tuesday. Before we jump in, though, and talk about my favorite trades for tomorrow, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy these videos tonight, do me a favor, as always, hit that like button for me and give me a shout out, give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, right? Tuesday is not going to trade itself. And I'll tell you, there are some really nice trades we're tracking for tomorrow. Let's start first tonight, as always, on the 60-minute chart. Got one set up for the Nasdaq and the QQQs, the Emini, and the SPY. You know, guys, I like to use the 60-minute chart to help me plan my trades for the following day. Later on in the video here tonight, I'm going to drill down to some tick charts, and we'll talk about how to time the perfect entries using tick charts. We'll cover all those details as we go deeper here. Well, you can definitely tell we're pretty bearish, right, by looking at the chart right in front of you. But did you watch last week's videos? We ended the week last week. We talked about strong move down, breakout pullback right off of the trading range, and retest of the low. Strong move down, breakout pullback off the trading range, and a retest of the low. We pretty much finished the mission we talked about last week, right? Well, now they've retested lows here on both the Nasdaq and the S&P. I see no follow through whatsoever at those lows. And when you don't follow through those double bottoms, at this point now, it's pretty safe to assume now buyers are going to try to rotate this market higher. It seems almost a given at this point. Nothing ever is a guarantee, right? But at this point, it's quite safe to assume that buyers in the S&P are hunting for that 45.60 high. Buyers in the Nasdaq are hunting for that 15.610 and a quarter. If the buyers really get what they want, the S&P will end up back around that 4,600, that range acting as a magnet. Nasdaq would love to rotate all the way back up and take out some of these big range highs later on in the week. That would be the goal later on in the week. For now, though, let's take one step at a time right now. For right now, though, we assume there's a bullseye on the S&P at that 45.60 and that 610 and a quarter here on the Nasdaq. So I like the idea of some buying opportunities as we rotate, but one thing we have to be careful with is you'll notice there's resistance overhead on both the Nasdaq, right, and the S&P. So as we go higher, I've got to be careful not to chase it going higher, right? I think pullbacks, the right type of pullbacks, are probably where the best money be made for tomorrow. And in the video tonight, I'm going to make sure you know how to time the perfect pullback as we rotate off of these lows. So we had a lot to cover tonight. Before we jump in, though, and kind of go into the details of the actual entry techniques and finding those perfect pullbacks for tomorrow, let's double check the calendar for tomorrow. There's not a lot to worry about here this week until we get that CPI number coming on Thursday. We've got international trade coming out at 8:30 tomorrow. So I wouldn't worry too much about that. No real big news for us tomorrow. Really nothing until we deal with Thursday. I do want to give you guys a heads up, though. There'll be no video newsletter published on Wednesday evening. Going to be out of the office on Wednesday. So keep that in the back of your mind. We'll come back tomorrow, obviously. But again, no major news for tomorrow. Really nothing on the E-mini and the Nasdaq rate radar until we get into Thursday's CPI, and we'll talk about CPI more and more as we get closer to Wednesday evening. So just be aware of that. Now, back to our charts, though, because, of course, the money is made on the charts. Let's go over all of our favorite trades here for tomorrow. That way you have a game plan to make some moolah on Tuesday. Why don't we jump into the S&P and the SPY first, and we'll grab the Nasdaq and the Nasdaq and the QQQs to finish things up here on the video here tonight. Now, like I mentioned earlier, if you were here last week, we talked about this quite a bit last week, right? It was a range-bound market for most of July. Strong run down. That was that sucker punch the markets got from that downgrade from Fitch, right? Remember that big move down we saw last Tuesday into Wednesday? Strong move down. And we talked about this last week, right? Strong move down says what? Says pull back and a retest of that low. I got a lot of emails from you guys, a lot of comments over the weekend, people making bank on that breakout pullback that we talked about on Thursday night before the weekend last week, right? So now here we are, right? We retest those lows, and now with no follow through that low now, we assume now the buyers are trying to rotate back up here now and take out that 45.60. And if they get their way, we'll end up all the way back up into that trading range before too long here this week. So I definitely have the mindset of being a buyer right now. Now let's go to the tick charts, right? So now that you kind of know more about what's kind of going on in the bigger picture, now let's go to tick charts. Now I like to use tick charts because tick charts make everything easier. They make finding support and resistance easier. They make entries a whole lot easier. This is a 6,000 tick chart in the upper left-hand corner. And in case you're watching for the first time right now, this is the 21 EMA, the exponential moving average, pretty much the default settings of that 21 EMA. Now that you kind of know more of what you're looking at right now, what's the most important factor now on the faster tick charts that will tip us off to how to make money tomorrow? Well, first of all, this is a relatively slow grind higher, right? The market turned off of that low and pretty much grinds higher. Really, there were no meaningful pullbacks, very shallow pullbacks the entire run higher. That leads me to believe that as we start getting up into overhead resistance like you saw on the 60-minute, and without any real meaningful pullbacks that we saw today, you have to think there's a lot of cash that's sitting right on the sidelines right now who would love to buy some meaningful pullbacks. Now, when I say meaningful pullback, what do I mean by that? Well, what you want to do is you want to look for what's called a two-legged correction or a two-legged pullback. In my trade room, I call these 1, 2, 3 moves. Now, again, I don't want to buy high, right? I want to buy as low as I can. No meaningful pullbacks, overhead resistance. So how do we time that perfect entry? The way I want to think about it is I want to get underneath the moving average. I want to see one leg and two legs. Okay, now in my free trading classes, we talk about what are called measured moves, right? So these are oftentimes symmetrical, right? This kind of measured pullback. Well, usually these two-legged pullbacks or two-legged corrections, they'll usually go a little bit further than that 100%, right? So imagine it's a 100% correction or 100% extension off that high. So it'll usually be just a little bit more than that 100% or that measured move, that measured correction off the high. That will give you, and of course right now I don't have enough information yet to know exactly where that two-legged pullback or that two-legged correction is going to be, but that's what we'll be looking for tomorrow in our trade room. So knowing that, right, knowing that we're still kind of waiting for more information on this, I'd like to get underneath that 21 moving average, get these bears to take this thing lower, and this is usually where the fun happens, right? Because we're very bullish here in the short term. We assume that pullback will get bought up because of no meaningful pullbacks, because of the rotation off the low on that 60-minute. What I'd like to do is rather than trying to pick the bottom, it's very difficult to make money, especially when you're new to this stuff, trying to pick the bottom on these. So rather than trying to pick the bottom, what I'll do is I'm going to use a very simple pattern combination, which I call a failure. So imagine bears come in, they try to short that pullback off the moving average, right? Think about where their stops are going to be. In a bull market, every time I get underneath the moving average, I like to trap the bears in, let them get short, and then, in my free trading class, we talk about these called failure patterns. So we trap the bears in. Again, think about one, two-legged pullback, two-legged correction, whatever you want to call it. I call them 1, 2, 3 moves in the trade room, and then get those bears roped in and use their stops as fuel. Now, what oftentimes happens is you'll see something called a failure into pullback combination. Okay, a failure being below the moving average, and then once we pop above the moving average, it's that first pullback. This is the same basic idea, right? So failure into pullback combination. What I usually do is take half off target at the high, and then because of those levels overhead on the 60-minute, leave those targets, leave some runners up to those 60-minute levels I showed you a few moments ago. All right, so slow grind higher. I don't want to buy high. I think the best money made with that nice two-legged correction. That'll help get you on the right location as far as where the best pullback will be. But again, we're not trying to pick the bottom. We'll trap the bears in, failure into pullback. Now, I'm sure some of you guys right now are wondering, okay, if we're anticipating a pullback, how would I short this thing, right? Could I short this thing? Well, what's the problem? The problem is momentum. There's a lot of bullish momentum right now. And trying to pick the top on this could keep on grinding and grinding and grinding. So don't be naive and don't be foolish. Don't try to force these things off the high. There's one entry pattern I'll use in a bull market to short the top. It's called a crown reversal pattern. Now watch how this pattern goes. It's just like a trap setup you guys are learning in the free trading course. As we pull back, if we begin to see buyers off the moving average, try once. Then we'll go below the 21 EMA and we'll pop right back up just a little bit above the high of what I call the first try. One try for the buyers, two try for the buyers. Look for a strong signal candle closing below the moving average, and bam, that's your short on the high. This is basically wrapping together what I call a failure pattern. It's a two-try failure with a bull trap right off of that high. Remember, I teach this in the free trading classes. I teach this crown reversal. I teach the failure, the pullback combo, which reminds me, if you haven't taken that free class yet, I know a lot of you guys have because I get such great feedback from you guys every week. What I'll do is I'll put a link up here for you in the upper right-hand corner. If you're not making consistent money right now, grab that link, take that free trading course, because the strategy you'll learn in that video series will teach you a simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And most importantly, you'll learn 4 of my favorite entry patterns, things like crown reversals and traps, failures, pullback combos. If you're tired of missing the best trades right now, grab that link that popped up there, take that free course. You'll love. We got hundreds of examples of failure into pullback combos in that short video series. And also don't forget too, I'll also put all the important links you guys need. I'll put that down in the description of the video here tonight, just in case you can't grab that pop up there as well. All right, guys? So as we're going higher here, 1, 2, trap high for that short. And remember, be careful. One leg, two leg correction. And then what do? We get underneath the moving average, trap those bears in, failure into pullback combination. Then what? Back up to retest those highs here, right? So a couple trades I'm watching there for tomorrow, one against the trend and one going with the trend. Now, I want to cover one more scenario, which really is kind of the ideal scenario here for tomorrow. Let's say we go sideways here overnight. Okay, let's say we go at really any point, right? Tonight, tomorrow morning, the minute we start going sideways, this becomes a bull market into a trading range. Okay, you will quickly learn to look forward to range-bound marks because they're so darn easy to make money with. Once we start seeing overlapping candles, the moving average will start to flatten out on us. Double tops, double bottoms. Once we go sideways, the game plan gets really easy. What we're going to do is we're going to go out, and we're going to find levels of support below that trading range, okay? Like a prior swing low, right? Or a trend line, or a pendulum swing, the amount above, right? The amount below. This is stuff you guys are learning in the free trading course. Once we go sideways into a trading range, the game plan becomes super easy. You wait for a breakout. Ranges act like magnets, right? Ranges are basically magnets on the chart, okay? We're bullish into a magnet range. So wait for the breakout. Do not short that breakout. Wait for the pullback. Once those bears get short and try to take it lower, remember, bull market overall, range is the magnet. We're at support below that trading range. Horrible place to be selling short, but hope they do, because once those bears get caught short, we can now look for, like I mentioned before, that failure, right? That failure into pullback combination. All right. And of course, I'm keeping things pretty simple right now. We'll go into a lot more detail of the specific entry tactics, right, in that short video course I mentioned earlier. Okay. Now, where are targets on this? These are easy. Targets are back to retest the high of the range. What I tell my students in the trade room is you want to make sure the bulk of that position is off when we go back to retest the high. And then remember, ranges love to rotate. right? So the amount we go below the range will oftentimes go above the range, and that will create the next kind of runner target as we go, all right? So if we go sideways into a range there, we're focused on buying below that range off support, use the range as a magnet, failure into pullback combo. There's one other variation you want to be aware of, and it looks like this. Sometimes what happens, I want to make sure you guys remember, we don't usually get those perfect setups, right? Hopefully we will, but you want to make sure you think about what are some other variations of this. That way we're mentally prepared and we can kind of roll with the punches tomorrow morning in our trade room. Now, let's say, for example, now we go range bound, but now we go higher first. Okay, these are always a bit tricky, right? Because ranges act like magnets. Now, if we break out higher, if we pull back and we jump off that moving average, we call these 1, 2, 3 breakout patterns. It's a little bit too much to cover in this video right now, but that basically gives the new trend. We'll find some measured moves. We'll worry about that tomorrow in the trade room. However, a lot of times what happens though is they'll run right into resistance. The buyers will try a couple times. Oh, and by the way, what would be the pattern to short this thing? How would you short this? A crown reversal, right? That same pattern we talked about a moment ago, right? It's really the only pattern you can short off a bull market like this, right? See how I do that? It's 1 try for the buyers, it's 2 try for the buyers, and that bull trap. We talked about this a moment ago. The point I want to make though is that if we end up rotating off the high like this, be careful, because the amount we go above will oftentimes be equal to the amount we go below. That will create support down here. Now, there's a little bit of a small adjustment in the entry here now, because as we rotate off the high, well, just like the rotation off the low on the 60-minute time frame right now, this creates a lot of momentum. So oftentimes what happens is this thing will fake out, break out off that high. It'll rotate all the way back down and really have a lot of strength going lower. So the moral of the story is, with all of that momentum coming off the high now, I'm always very cautious about getting too aggressive at buying it. I want to be a buyer here because then we're overall bullish. We're at support below a trading range. However, that momentum tells me give the sellers the benefit of the doubt, respect that momentum, and now make them try twice for a failure. Okay, does that make sense, right? So it's very simple. It's very simple. If we go up into a trading range and we pull back, momentum is all bullish still, right? It's all bullish. I can be pretty aggressive on that pullback, right? But if we go above the range first and then rotate down, so that's a big difference. It's a small difference, but a big deal, right? Now we're rotating off that high and all of that momentum rolls over. And so because of that, right, I want to be more selective, anticipate those bears. We'll try to keep it going lower and just simply buy into their stops. Okay, I need to get those bears trying a couple times so I can literally buy right into those stop losses. Okay, one of my first mentors, like almost 20 years ago, he would always tell me, look for areas where everyone's a buyer, right? Everyone's a buyer. This is a situation where everyone becomes a buyer. Why? Because the buyers are buying low, right? By definition, buyers will buy support off the range low. But then when the bears get stopped out, they become buyers automatically because they're getting squeezed out of their position. So these are very desirable trades, right? When everyone's a buyer. Just got to make sure, though, you trap those bears in, don't pick those bottoms, and look forward to go up from there, back up into that trading range. All right, guys? So a couple of variations there on that, right, as we go. So really right now, everyone's just waiting to see when will we get that two-legged correction, right? What exactly will it look like? And then try to trap those bears in, right, and back up to retest the high. The question I have right now is will there be a range in between now and then? And be careful shorting off these highs right now, because these ranges, like in the Nasdaq right now, right, these love to rotate pretty aggressively, right? That range rotation, as it rotates back and forth, can be very, very strong. So just be careful. Just be careful walking in front of a freight train right now. Look for those crown reversal patterns. All right, let's grab some Nasdaq here right now, right? So pretty easy game plan on the on the S&P. What is going on with the Nasdaq? Now the Nasdaq is quite different, but it's pretty similar overall here. Now let's take a trip back in time here because it's very, very important. We had that strong run down, middle to late July into a trading range. Right? Ranges, of course, act like magnets. They chop around for a while. They pop up, right? Almost made a run back to retest the high, right? They were inches away. And then, of course, with the downgrade from Fitch, right? The downgrade from Fitch runs the market going lower, okay? We're roughly about, see that? Above and below, roughly about the same amount. We call these pendulum swings, okay? So we're starting to run into support here. This is a very strong run down. Right? That run down last Tuesday, Wednesday, right into Thursday, very, very strong. Anytime we see a strong move in one direction, we expect a pullback and a retest of that low. We talked about how we anticipated a breakout pullback because that's what ranges do. Ranges love to breakout pullback. And so just like on the S&P, right? This looks very different than the S&P, but it's the same basic principle. We don't see any follow through to that low. So now it's perfectly realistic to think now these buyers are going to rotate back up and go hunting for this high right here. And if the buyers get it their way, they'll begin to flesh out this big rotation all the way back up. And I would imagine the buyers have two things on their mind right now. One, take out that 15,610. And two is, let's see during this summertime slowdown, right? Because we're almost middle of August here right now. Might we get a low volume squeeze back up into that 15,900? Ranges love to rotate back and forth. This makes perfect sense. Now, like I mentioned before on the S&P, we're looking pretty bullish right now as it rotates off that low. But as we get higher, what's our problem? We've got a channel coming down. We've got overhead resistance right here. So we got to pick our spots wisely, right? We don't be buying here too aggressively as we go higher. Now, back to our tick charts here, because again, I believe tick charts make the entries a whole lot easier. What's the most important factor right now on the Nasdaq tick chart? The most important factor right now is it's a bullish move into a trading range, and this is what you call rotation off the low. We go lower, and now we're rotating off the high. Remember earlier how I said beware of the rotation up and then back down again? This is the same thing, right? Now we're rotating lower and then, we're rotating off the low, right, and back up here. This is a lot of bullish momentum right now. And so got to be very careful being a short seller right now, really until we start getting up around things like the pendulum swing level, up around triangle level. So we probably do have some space to go here right now on the Nasdaq, the amount below the range, the amount above the range, and of course just overhead here, a little bit open space there, but not that much space, is that 15,610 area. Okay, so we have a few more options on the Nasdaq because the Nasdaq has kind of wound up and running here right now, whereas the S&P feels a little bit, kind of bubbly, a little frothy right up there at those highs right now. So really, the only kind of key difference in the Nasdaq is as we go higher here, and again with that strong momentum rotating off the low, this is where bear traps come in handy. So on our way up to pendulum swing, triangle level, I would imagine really it's a lot of resistance right in this area. Right there, right around that 15,515, 15,541. So as we're making our way going higher here, what's my concern? There's always a concern, right? Momentum is great, but location isn't that great. So how do we buy low? We buy low with what are called traps, right? This would be a bear trap. Okay, look at how this pattern sets up. Right? It's a strong move. It's a higher high in price, higher high, very important, and a little trap right below that low. You guys will learn about these in the free trading course. And then remember, like I said earlier, ranges love to break out pullback. So imagine now we're running higher, right? Imagine now we're running higher. Maybe we get the trap, maybe we don't. We make our way going higher now. Now we start running into overhead resistance. Is this a good time to buy? Probably not, right? Ranges love to break out pullback, okay? And because of a lot of momentum now going higher, it's very easy to think now a pullback down to that range top will probably be seen as a buying opportunity. Now, what do you think? Is it possible that pullback might use that two-legged correction technique that I talked about before? Absolutely, right? That's absolutely on my radar here for tomorrow. So as we're going higher here, I would love to get something like, again, I call them 1, 2, 3 moves in my trade room, but think about a measured move, 1 leg, 2 leg, and it will usually be just a little bit below it, right? I'm obviously kind of guessing right now. We'll know more tomorrow in the trade room. But this is a great example of where once we get that two-legged correction now, right, or once we do get that two-legged pullback or two-legged correction now, we can now get those bears coming in, get them roped in. Remember, there's a lot of momentum, right, coming off that low. There'll probably be some channels coming in off that high, off that low, stuff like that as well, right? So range top is support, channel bottom is support, and the same basic idea we talked about on the E-mini. Trap those bears in below that 21 EMA, get above that 21 EMA, and grab that, right? Grab that first test, that first pullback on the way back higher. Classic failure into pullback combo after a 1, 2-legged correction. And again, if you want to short something like this, you'd want to do it after we complete the objective of that pendulum swing, right? So as it's now pulling back, buyers once, buyers twice, there's that bull trap, right? This is basically marrying together both a failure pattern, buyers once, buyers twice, and using stops as fuel, right? Thinking about where their stops are and selling into those stop losses. But at the same time, though, you have to make sure when you're shorting these things, well, first of all, if it's me, I'm going half-size position. I'm going quarter-size position, right? These are not full-size positions in my world, right? In my world, my size is the smallest it can be, right? Half-size, quarter-size on a counter-trend trade like this, right? We'll go big on our best trades like those breakout pullbacks. The big thing, though, is think about it, right? As we're going lower, who's waiting down there? Probably buyers, right? Probably buyers there. So I have to make sure that I'm selling as high as I possibly can. Because if I'm selling down here, I'm walking right into what? Potentially a bear trap, right? Right when the rookies are shorting this thing going lower, that's exactly what the buyers want, right? They want these rookies to short this, trap those bears in, right? Get them trapped in and literally use their exits as fuel to run back higher again. All right, guys? So a slight variation on the Nasdaq here, but really kind of the same recipe, except rather than a channel pullback like we had in the S&P, we're kind of looking for a breakout pullback of this trading range. Now, I would imagine if things kind of go crazy, right? If, who knows what's going to happen. If we were to find our way all the way back down, right? We come off that high, 1, 2, they bull trap and they roll all the way back down. Can I buy down here? Absolutely I can, right? I'm at support below a trading range. But remind me from the previous example, what's the concern here? The concern is not location. Location's great. It's a great place to be a buyer. You're at major support with a range above you. Great spot to be a buyer. But what else? Yeah, the momentum, right? Momentum. This is the same thing I mentioned earlier, right? Of that range rotation off the high, right? Like I talked about on the S&P. If it goes higher and then comes back down, now all of that momentum is very strong. So what do? You give the bears the benefit of the doubt. You anticipate them to want to keep it going lower, and you let them try a couple times so that they can dig their own grave down there, and you can use their exits as fuel to run back higher again. Right? So if we do happen to roll all the way back down, could happen, right? Remember, I don't know what's going to happen tomorrow. All I know is what I know right now, and as things change tomorrow morning, we'll change with it, obviously. That will be a scenario to keep in mind, right? The amount above the range, the amount below the range, support level. I like that. I like that two-try failure variation off the low in that situation as well. All right, guys? And then really the only other kind of variable right now would be if we go sideways into a trading range, right? If we stick up here into a trading range, same idea we talked about on the E-mini, right? If that happens though, we'll go out and find that level probably. Use that level for a support, right? You know what I mean? Right? That level, trap those bears in and back up. A classic bullish market into a trading range. And again, remember, if it rotates up and then back down, right? It's a two-try failure off of that low. All right, guys? Plenty of opportunities tomorrow morning. A lot more on the buy side right now, at least until further notice, right? At least until we know more tomorrow. Remember, be careful on the short side because these types of markets, they love to rotate and kind of keep on grinding, and it's the month of August. So just be careful stepping in front of any freight trains that we see here for tomorrow. Now, speaking of tomorrow, the game plan is all set to go. I'm excited just kind of going over this stuff with you guys tonight. But you know the markets, they're going to throw us a curveball. You know we try to do our best to anticipate the best scenarios, but I'm sure something will surprise us tomorrow morning. But that's exactly why we have our trade room. We open up every morning at 8 o'clock Eastern Time. It is the best place to learn this stuff and trade along with us. I have so many students making money with us right now in the morning trade room. You'll love it. It's all wrapped together in an unlimited package. I'll put all the details in the description of the video. I'll put all the links down there for the membership classes, the trade room sessions, and of course, most importantly, the free trading classes. I would definitely recommend start with the free course first, learn the basics, get the fundamentals down, and be ready to go for trading with us as a member in the morning trade room. But I'll put all the important links down in the description that we have them to get registered, and I'll see you tomorrow morning at the opening bell. If you got questions, if you have trouble getting access to any of the tools we've talked about tonight, please don't be afraid to call us or email or use live chat. If you need help, we're here to help every step of the process. Right, guys? Great job tonight. Thank you so much for sticking around all the way to the end. Had a great start to the week here this week. We got more coming tomorrow. Hopefully, I'll see you tomorrow morning at the opening bell in our morning trade room. If not, same time, same place, back here again. Get ready for what should be a great Wednesday trading session. Guys, my name is Joseph. Thanks for watching. Be well. Be nice to each other out there, will you? And be here next time. Adios, amigos. Bye-bye for now.